The US dollar. It's not just paper money or numbers in a bank account. For nearly 8 decades, the dollar has been the backbone of the global economy. It's the currency that powers trade, settles debts, and stores wealth. When oil is bought, when ships full of wheat are sold, when countries borrow money, chances are those transactions are happening in dollars. Today, about 60% of global foreign reserves and nearly 90% of international trade use the US dollar. But here's the question: could that dominance be slipping away? In recent years, a group of countries known as BRICS, Brazil, Russia, India, China, and South Africa, has been making moves that challenge the dollar's supremacy. And in 2023, that group expanded to include new heavyweights like Saudi Arabia, the United Arab Emirates, and Egypt. Together, they represent more than 40% of the world's population and nearly a third of global GDP. So, what exactly is happening here? And is the dollar truly at risk of losing its crown? Let's break it down. First, how did the dollar become so powerful? After World War II, the global economy was in ruins. In 1944, world leaders gathered in Bretton Woods, New Hampshire, to design a new financial system. They chose the US dollar as the anchor, backed by gold, because at the time, America held most of the world's gold reserves. From that point on, global trade ran on dollars. Even after the US left the gold standard in 1971, the dollar's dominance held strong, especially after oil producers agreed to sell oil only in dollars. This system, often called the petrodollar, locked in demand worldwide. The result was clear. The US dollar became the world's reserve currency, giving America enormous advantages: the ability to borrow cheaply, global demand for US debt, and unparalleled influence in international finance. But dominance creates dependency, and dependency creates pushback. The BRICS nations argue that the current system gives the US too much power. For example, when Washington imposes sanctions on countries like Russia or Iran, it can cut them off from dollar-based systems like SWIFT, essentially, freezing them out of global finance. China, Russia, and other BRICS members see this as a vulnerability. They don't want their economies to be hostage to US policy, so they're building alternatives. China has been pushing trade in yuan, especially with countries that import its goods. Russia now sells much of its oil to India, and China in local currencies, not dollars. Brazil and China recently signed a deal to trade directly in yuan and reals. And within BRICS itself, leaders have openly discussed creating a shared currency for trade. At the 2023 BRICS summit in Johannesburg, the expansion of the bloc signaled growing momentum. With oil giants like Saudi Arabia and the UAE now joining, the conversation around de-dollarization is louder than ever. But here's the tricky part. If not the dollar, then what? Some suggest the Chinese yuan could take over. After all, China is the world's second largest economy and the biggest trading partner for dozens of nations. But the yuan isn't fully convertible, and China tightly controls its capital flows. That makes it hard for the yuan to play a truly global role. Others suggest a BRICS currency, perhaps backed by gold or commodities like oil. But creating and managing a shared currency among countries with such different economies and politics would be extremely complicated. Another possibility is digital currencies. China has already launched a digital yuan, and other BRICS members are experimenting with central bank digital currencies, or CBDCs. These could, in theory, bypass the dollar in cross-border trade. Still, none of these options are ready to dethrone the dollar tomorrow. To understand why, think about what makes a currency dominant. It has to be trusted, it has to be stable, and it has to be available in massive amounts for global trade and finance. Right now, only the US dollar checks all those boxes. America has the world's deepest capital markets, a strong rule of law, and a global network of banks and investors. Even when Washington racks up trillions in debt, investors around the world still buy US Treasury bonds because they trust the system. That trust is hard to replicate. Still, the BRICS challenge isn't just talk. Consider this. In 2001, the dollar made up about 73% of global reserves. Today, that's down to around 59%. Other currencies, especially the yuan, are slowly gaining ground, and geopolitical shifts are accelerating the trend. After Russia's invasion of Ukraine in 2022, the West froze over $300 billion of Russia's foreign reserves. That shocked many countries, who suddenly realized that their dollar holdings could be at risk if they ever ran afoul of US policy. Meanwhile, countries like Saudi Arabia are exploring oil sales in yuan. If the petrodollar system weakens, the ripple effects could be massive. In other words, the dollar's dominance isn't ending tomorrow, but cracks are appearing in the foundation. For the United States, dollar dominance has been like a superpower. It allows Washington to finance large deficits at low cost because demand for dollars is so high. If that demand weakens, the US could face higher borrowing costs, a weaker ability to impose financial sanctions, and less influence in global trade. Some even warn that if the dollar's role declines significantly, inflation could become harder to control since the US imports so much from abroad. So why should you care as an ordinary person? Because global finance shows up in everyday life. If the dollar weakens internationally, it could impact the cost of imported goods, the value of your investments, and even mortgage or loan interest rates. For investors, it means paying attention to trends in commodities, currencies, and emerging markets. For consumers, it means recognizing that geopolitics, wars, sanctions, trade deals can hit your wallet in surprising ways. So, what happens next? Let's look at 3 possible scenarios. Scenario 1. The dollar holds strong. The US continues to grow, inflation comes under control, and no alternative currency proves capable of competing. The dollar remains the global reserve currency for decades to come. Scenario 2. A gradual shift. The BRICS expand their influence, trade more in local currencies, and chip away at the dollar's dominance. Over time, the dollar goes from being the overwhelmingly dominant currency to just the leading one among several. Scenario 3. A sudden shock, a geopolitical crisis, financial collapse, or major policy shift triggers a rapid move away from the dollar. This is the least likely, but not impossible, and it would be extremely disruptive. The key takeaway is this: the dollar's dominance is not guaranteed forever. History shows that global reserve currencies do change. Before the dollar, it was the British pound. Before that, it was the Dutch guilder. But these shifts usually take decades, not months. They are slow, messy, and driven by big geopolitical changes. Right now, the US dollar is still king. But the rise of BRICS, the growing push for alternatives, and the geopolitical realignments we're witnessing could be the early signs of a new era in global finance. So, the question remains: is the US dollar truly at risk? The answer is not immediately. But the pressure is building, and the moves happening today could shape the financial system for generations to come. This has been This Week in Finance. If you found this helpful, don't forget to like, share, and subscribe. And let me know in the comments. Do you think the dollar will stay dominant, or will BRICS or another currency eventually take its place?